All right, I'll try to do a real quick video. I- they don't get that many views, so it takes quite a bit of time for me to do them and then upload. So I don't know. Let me know if I should continue doing these or not. But it's a lot of repetition. So um, I'll do this one and we'll see how it goes from there. Okay. I wanted to go over. It was a pretty good day. Volatility dropped a little bit. So let me show you what's going on here. Okay, so as you can see, the S&P closed at 186.27. Um, it broke this 233-day moving average. That's a real bearish signal. This is a year-to-date chart. Okay, so um, technically this could fall hard and keep on going. Um, it hasn't broken that barrier in a long time. Let me show you what I mean. Um, 1 second here. Okay, so what I did was I pulled back the chart 5 years. Okay, this is a 5 year daily chart. And this solid white line here is the 233-day moving average. As you can see, these big green arrows here, those are the times when it broke above the 233-day moving average. Now, in order for it to break above the 33-day moving average, the 13-day moving average had to have broken below the 233-day moving average. Okay, so if you take a look, the last few times were here, 10/28. What year was this? Shoot, I've got to show the year marks. Hold on. Let's go to studies. Let's go to time access, and let's show the year marking lines. Okay. Anyway, so this is 2011. Okay, so 10 something 2011. It broke below the 13-day moving average, broke below the 233-day moving average, and then it went right back up. It didn't last. Well, actually, it did last long. It broke below here, see, and then it came up. It lasted up about, geez, 1 month, 2 months, 3 months. Okay, so all kinds of things could happen here. Okay, so when you pull it out, it doesn't look like long, but it happened quite a few times. So, and as you can see, there's really nothing from stopping it from dropping. I mean, it's already broken how many supports already? But we're at a pretty critical support right now. Here's what I mean. I'm going to go to year to date. Okay, and so here's where we started year to date, roughly around one. I don't know. Let me zoom in real quick. Okay, so let me zoom in, and here's where we close on the first trading day of the year, right around here. So I'm gonna right click. Wait, hold on. I'm gonna right click, and I'm gonna add a drawing, and I'm gonna draw a trend line, and I'm just gonna. Is this right? Crap! I can't see if I can do it right. Okay, there we go. Okay, then I'm gonna zoom out a little bit, and I have to edit this drawing, I guess. I'll make it thicker. Crap! Where the heck is it now? I can't even see it. Hold on. Oh, here it is. And then I'll highlight it. Let me edit the drawing. Let's make this thing, what's the easy color? Yellow, green. Let's make it let's do a pink line and make it like a yellow line, I guess. No, not yellow. Let's make it pink or something. Okay. And then I'll try and extend it out here. Shoot, I can't. Oh, here it is. Sorry, let me just activate the drawing and then let me drag it out. Here we go. Oops. Can I extend this or what? Anyway, what I was trying to. There we go. So let me extend this line right here. I'll activate the drawing again and I'll kind of drag it out here. So it's roughly around, I think it is anyway. This should be straight. Sorry, I'm not the best guy. Anyway, you wanted to hold this line right about 180, 183.88. You kind of wanted to hold this line because if it goes below this line, it'll go into pretty much negative territory for the year. And the mutual fund managers, all these guys that manage a bunch of money, they do not want that to happen. So that's probably why you saw all these losses. Let's say you were up, whatever, 10% or whatever, 5% for the year, and you see this happening. You don't want to show your customers that you lost money, right? So you want to take your profits, and if the S&P 500 drops below, it goes negative for the year, you supposedly beat the market, right? So, but at the same time, if they didn't, they really don't want it to go below this level. So I'm really, really watching this year-to-date level right here. Okay, so um, I'd like for it to hold that this line right here. So if you look, I'll go to a 15-minute chart. Here's the 5-day 15-minute chart. So you can see it broke through, came up, and it's flirting with it. And today, finally, it kind of broke above. But see, on this 15-minute chart, it's having trouble breaking the 233-day moving average on the 15-minute chart. As you can see here, when it broke, this yellow arrow broke, it's a strong downward trend. If we can get it to break above here, okay, and it trades around 190, that's great for us golden gecko traders, depending on where you have your positions on. I have a 190 and a 185. They both expire at the end of the month. Everything else is pretty much okay. Or actually, even if I'm wrong and my strikes and it closes under my strikes, because volatility, if volatility can collapse, for example, what if it just traded around 185? Like, what if it traded around 185, 187, or whatever? What is the 188 even? Okay. What if it just kind of traded in this range right here, but volatility drops? Okay, you know what I mean? All the premium we sold up here, over here, and it drops, will all come in and make more money. And then you can just take profits and go from there. All right. So as you can see, Ivy rank is it climbed as high as 100, dropped again the next day, climbed again yesterday, dropped down today. So Friday should be important. We want to see the market continue to climb a little bit, okay, or at least stay even, and volatility collapse. All right. And we need to see this climb a little higher too. So I'm going to add a couple studies here. I'm going to add that average directional index study that I showed you guys. Okay, whoa, that's not what I want to do. Let's go to studies, load study set, go back. Yeah, I'll just use this one. All right, so here it is down here. Okay, and I'll zoom in a little bit. As you can see, it's at 32.963. All this year, okay, every time it hit around 30, well, this is right here. Yeah, in February, this is about as high. This is about the same level I got to in February. And then it turned over, right? Notice when this turned down like this, it signaled the bottom. Okay? See here the low right here? And then as soon as it started to turn over like this, the market started to recover. Okay, so the good news for golden geckos, because we want to stay in the range. We don't want it to drop too far too quick. It throws everything off. So if we can have it stay in this range and this turns over, which it doesn't look like it did yet, but it's at least it's not going up, right? We'll just see. I have no idea. But as soon as you see this start to turn over, that'll kind of signal the bottom. And if you're aggressive, you can even sell puts if you want, right at the money puts if you want to be really aggressive. Okay, so I kind of hope that happens, and I kind of hope it just stays. I'm hoping it'll stay within this range. Actually, see this light blue dotted dash line? That's the middle point between these two standard deviation Bollinger Bands. And if you look, that's about, I don't know, see 192 or so. If it trades in this range, oh my God, all the positions you guys put on will be awesome. Okay, so that's another thing I'm looking at. If you're worried about this is a traditional slow stochastic. As you can see, these numbers right here. Okay, look at these numbers when I move them out. When I put the mouse here, You can see the red line is at 17.7379, which is above the yellow line, 14.2945. Without getting into technical, all you have to notice is whenever the red line is above the yellow line, it signals an uptrend as well, right? Okay, so it is above it. We just need to sharply move up, and it'll we want to stay into this range, and that'll create a nice, um, nice up and down two-sided market where it's perfect for golden geckos. You guys sold these high Ivy rank, and it drops, okay, and then your premium comes in, and you just make a bunch of money. Um, Here's my positions. So I think I posted screenshots, but anyway, what I did was I rolled. What is this? I forget already. I know I have a 190 put that expires in October 31st, and I know I have a 188 put, but that expires November. That's the straddle thing with a bunch of premium. There's one more somewhere. Oh, here, right here. I have a 185 put that expires also at the end of October 31st. So next week, what I'm going to do is if we stay above 185, I'm not worried about this. My 190 will close. I might just close it for a small loss. Now, here's the thing. See that 190 though? If volatility comes down, even though it closes below 190, that turns into still a winner. So that's why my main thing is I just want volatility to collapse. So if volatility collapse, you'll see all these positions come into money. So all we're looking for is this to drop. Where are we at now? 88. And from 100 to 88 in a day. So if this comes down to even 50, you'll see a lot of stuff come in to play profit-wise. That's about it. Oh, wait. Let's look at what ES is doing. It's after hours, and I think they're open. I see movement. It's about 9:45 at night. Hold on. Yeah, see? It's at 18:55, which is about 185. Hold on, this chart hasn't come in yet. Okay, let's go to the 15-minute chart real quick. Okay, here's that 15-minute chart. And yeah, okay, got it. It's Friday. Yeah, right here. Yeah, it's fighting with this 233-day moving average. Let me scroll back real quick. Yeah, that's a good sign. Hopefully, if it can break above here on the 15-minute chart, it'll stay above the beginning of the year. Okay, that's about it. If anything comes up tomorrow morning, as I'm trading, I'll post it. Yeah. All right. Thanks.